Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm on the scan tab in the Thinkorswim platform, and I'm going to be scanning the S&P 500. If you want to see me scan a different stock list, feel free to leave that down below in the comments. And it's important to keep in mind that this is after hours data, so some of this may look different when the market opens or when this video comes out. But now I have a list of all of the stocks in the S&P 500 sorted by implied volatility, so going from the highest implied volatility and then descending from there. At the top of the list, we have Super Microcomputer, and it also looks like we have a lot of stocks that have earnings coming up relatively soon. We've looked at Super Microcomputer many times, so I'm going to go ahead and skip that one. Let's go ahead and look at Palantir. Looks like it has earnings coming out on February 3rd, so pretty soon, currently trading at about $78 with an implied volatility of about 78%. I'm going to go ahead and jump over to the trade tab, and we can see what kind of premiums you can make selling cash secured puts and covered calls on Palantir. As always, I'm going to be looking at the options that expire the following Friday. So in this case, currently 8 days out, but that might look different when the video comes out. And before I jump into cash secured puts and covered calls, I just want to call out this custom column that I have on my option chain that quickly calculates the percentage profit for selling a specific cash secured put at a certain strike price. So for example, if you sell the $72 cash secured put, you would make 0.5% profit. And that's based on the premium that you would get for selling that option divided by the risk, which in this case is if you did end up getting assigned on the position. And it gives you a similar percentage profit for covered calls as well. If you're interested in adding this column to your own trading platform, feel free to check out the link in the description where I have free instructions on how to add this to your own trading platform. Now let's go ahead and jump into cash secured puts first. It looks like you could make about 1.22% in 8 days if you sell the $75 cash secured put. This means you would collect about $90 in premium for selling this. And your risk here is if you did end up getting assigned on the position, you would need 75 times 100 because each option contract is equal to 100 shares. So you would need $7,500 in order to purchase the 100 shares if you got assigned. On the covered call side, it looks like you could buy 100 shares right now for about $7,898. And then you could go ahead and sell the $80 call options and collect about $208 in premium, or about 2.63% in 8 days. Let's jump back to the scan tab and look at a couple more. Let's go ahead and look at Monolithic. Looks like they have earnings coming up on February 6th, currently trading at $698 and has an implied volatility of about 63%, so a much more expensive stock to trade. Let's go ahead and jump back to the trade tab and see what kind of premiums it's currently paying out. This stock does not have weekly options, so it looks like it has monthly options. So we're going to be looking at the next closest option, which is expiring in February on the 21st, or 29 days away. Starting with cash secured puts, it looks like you could make about 2% selling the $600 cash secured put. This means you would collect about $1,100 in premium, or maybe even $1,200 in premium for selling this cash secured put. But because this is a much more expensive stock, if you did get assigned on the position, you would need $60,000 in order to purchase the 100 shares if you got assigned. On the covered call side, you could buy 100 shares right now for $69,879. And then you could go ahead and sell the $700 call options and collect about $4,890 in premium, or about 7.24%. The premiums here are much larger in terms of what you can make because there is many more days until expiration. This one has 29 days versus the Palantir stock only had 8 days. And this is a much more expensive stock as a whole. So the current stock price is $698. So in order to buy 100 shares, you would already need a lot more money. I'm going to go ahead and jump back to the scan tab. Feel free to pause the video and take a full look at the list of S&P 500 stocks sorted by highest implied volatility at the top and then descending from there. And if you have any questions or comments, feel free to leave those down below and I'll make sure to answer them. And as always, if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next video.